far, the Q2 numbers that we've seen from the FMCG pack, let's compare three FMCG majors, the likes of Nestle, Tata Consumer and HUL. Let's compare them across a whole brand of metrics, the likes of revenue growth, volume growth and the outlook of the management going ahead. First up, let's talk about Nestle. Versus our estimates, it's been a miss on the Q2 numbers. Revenue has grown at 1.3%, and when it comes to volume growth, though they've not specified the overall volume growth, what we know is that Maggi noodles has showed a positive volume growth, and Phillip Capital is also estimating an overall volume growth, in fact a volume drop coming in of 1.5%, so that was also slightly weak coming in for Nestle this time. Margin contraction has been seen, 22.9% versus 24.3% on a year-on-year basis. If you take a look at Tata Consumers, however, slightly better review than what the peers have reported this time. Mixed set of numbers coming in, not all that to cheer about, but it's not very disappointing as well. Revenue growth has come in at 13%. The tea volumes, however, have slipped. They're down 4%. India food business volumes are up 1%, but the salt business is flat nonetheless. Margins have also seen an expansion. Lastly, let's talk about HUL. It's been an inline set of numbers, but it's been a big drop on the volume expectation, so that has been a miss. Revenue growth has been seen of 1.5%. Volume growth, the company has said that the underlying volume growth has come in at 3%, and margins have also contracted. Now let's understand the kind of commentary that we're hearing from these FMCG players on the outlook going ahead. Nestle says that commodity prices continue to remain elevated for coffee and cocoa. When it comes to Tata Consumer, they say that while rural demand is recovering, it is still not at the level that will likely give a double-digit growth in volumes. Urban demand has been soft, with food inflation being a concern. For Tata Consumers, they've also said that while they're seeing some green shoots in rural recovery, they are seeing some softening coming in on the urban front. Let's lastly also talk about what HUL's management had to say. They say that demand has remained steady, with rural continuing to grow well, whereas urban demand is seeing weakness. So sharing in that sentiment, rural is doing well, but urban is seeing some softness coming in. Urban demand is slowed down. Tier 2 and 3 cities are showing some growth, but it's the big cities that are leading this slowdown in the urban space. They've said that EBITDA will continue to be at healthy current levels. The company will also be taking a low single-digit price growth if the commodity prices remain where they are right now, and they're also saying that value growth will be ahead of volume growth from the next quarter. So a mixed set of commentary is what we've seen. The shared sentiment is that rural is picking up, urban is slowing down on the flip side, and also it's been a miss for Nestle, in line largely for HUL but miss on volumes, and a mixed set for Tata Consumers.